Hello and welcome to today's lesson on the 20 MA Daily Bullish Cross Trading Strategy. Now I want to start off with dealing with some of the problems that as traders we face. One of the biggest problems that many traders face is that many of us don't have a trading strategy to enter the stock before it rises. A lot of traders, when they enter into the world of trading, whether it's stock market or forex, right, they will go here and learn a bit here, learn a bit there, but they don't really have, a trading strategy to enter a stock before it rises. And the second problem that always plagues traders is that they don't have a trading strategy that has a good reward to risk ratio. Now and then you'll learn a trading strategy that gives you 1:1 reward to risk ratio or 1.5 reward to risk. But in the long run, you want to have a trading strategy that gives you at least 2, 3 and maybe even 5 reward to risk ratio. And there's a lot of problem that a lot of traders face. But there are trading strategies that could give you a good enough reward to risk ratio. Now, the third problem that many traders face is that they don't have a trading strategy with solid trade management, stop loss, and also take profits. So a lot of traders, they enter, especially beginners, they enter and then they get lost, and then they try this trading strategy for 5, 6 times and it doesn't make money, and then they move on to the next strategy, like one strategy after another, and the problems compound. So these are the 3 major problems that a lot of traders face. So if you are also facing one of these problems, perhaps you might be facing many other problems as well, you've come to the right place, because in this lesson you will learn, number 1, a trading strategy to participate in the stocks before it rises. I'll teach you how to buy stocks here and ride it up and maybe sell here, and you will have a trading strategy that will give you at least 2 reward to risk ratio. Maybe sometimes you get even more, 3, 4 or 5 reward to risk ratio. Secondly, I also teach you how to put a stop loss and how to manage the trade and how to sell on the way up and take profits off the table. And the third thing is, I will teach you how to use the 20 period moving average and the 50-day moving average to find a high probability trade in daily charts. So if you are excited and you like what you hear, the lesson that you're going to learn, please click on the subscribe button and also the notification bell, because this is just one of the video lessons I'm doing. I plan to do more trading strategies so that it gives you an idea, not necessarily that you will take and do the trading strategy straight away. You want to learn as many trading strategies as possible, paper trade it, so that someday you will find the ideal trading strategy that works for you. And today we're going to deal with the 20-50 MA Bullish Cross Trading Strategy. And maybe at the end of this lesson you might decide that this might be the one for you. Now, there are a few principles that I would like to teach you before we go into the exact trading strategy itself. Principles are important and you need to follow them in order to be successful in this trading strategy. And not only in this trading strategy, but in many other trading strategies as well. You need to have principles and you need to follow them, especially if it relates to your own this trading strategy that we're gonna look at. So principle number 1 is when the stock is above the 20 period moving average, it means that it's short-term bullish. Now I have with me here two lines. One is the red line, which you can see here, and the other one is the blue line here. I've labeled them so that it's easy for you to spot the 20 MA and the 50 MA. Now we are primarily dealing with daily charts. Okay, this is the stock chart of Alaska Air Group Incorporation. 1D means 1 day, and each Japanese candlestick trading bar represents 1 day of trading activity. And the 20 period moving average is just the average of the 20 days trading price, and the computer will just calculate it and update it each day as it goes. So that's why you have a moving average. And so when the stock is above the 20 period moving average, we deem it as short-term bullish. So here we have the 20 MA below, the stock below the 20 MA. That's why we consider it short-term bearish. But the moment the stock goes back above the 20 MA, we deem it as short-term bullish. Look how nice the stock went up. Then it drops below the 20 MA, and see how it just collapse. And when it goes back above the 20 MA, it rises. And most of the time, indeed, during this period, the stock was trading above the 20 MA, and we deem it as short-term bullish. Now let's deal with the second principle. When the stock is above the 50-day moving average, we consider it to be mid-term bullish. So this is a longer period moving average. It's less sensitive than the 20 MA. You do not want to use it for short-term gauge of the trend, but you just want to use it as a mid-term gauge of how bullish the stock is. And to be honest, a lot of investors and institutional investors, they do look at the 50 MA, and if a stock is below the 50 MA, is considered to be mid-term bearish. If it's above the 50 MA, like here, we consider it to be mid-term bullish. Don't try to if it's too hard for you to understand, don't worry. With this new knowledge, go and look at many charts. Put in the 20 MA, put in the 50 MA, and try to look at what happens when the stock goes above or below this moving average. I use the simple moving average. You can see here is SMA 50, SMA 20. It means simple moving average. There are other kinds of moving average like the EMA, exponential moving average, or the WMA, weighted moving average, but we just want to keep things simple. Simple is enough, because trading itself is already very complicated. But let's keep things simple by using the simple moving average. Now the third principle you need to know is every stock that begins a new uptrend has to go back above the 20 MA. Now look at this period here. When the stock was below the 20 MA, it was in a downtrend, and here the stock is in an uptrend, but before it started the uptrend, it has to go back above the 20 MA. It's a given fact. It's there will never be a stock that begins a trend without going back above the 20 MA first. Okay, go through many examples, go through many stocks, and you'll always notice that before a stock starts a nice uptrend, it will always go back above the 20 MA. Now, which brings us to the fourth principle, is every stock that has a nice uptrend will have a 20 MA cross above the 50 MA. For the purpose of this lesson, I just call it a bullish cross. So we have a nice uptrend here, and what happened is the 20 MA was trading below the 50 MA, and then at this point the 20 MA went back above the 50 MA. The faster MA goes back above the slower MA, and we call it a bullish cross. And every nice uptrend always will have a bullish cross before the stock have a nice uptrend. Now the fifth principle is every stock that begins a decline will fall below its 20 MA. So look at the decline here, very nasty decline. Okay, but before it declined, look what happened. It fell below the 20 MA. So next time if you see a stock trading upwards but suddenly drop below its 20 MA, then you have to be careful, because that might mean the beginning of a new decline. And the sixth principle I want you to learn is every stock that begins a new downtrend will eventually have a bearish cross. So this is not a prolonged downtrend, but if there is a prolonged downtrend for many months, it always starts with a bearish cross where the 20 MA cross back below the 50 MA. So with this in mind, with these six principles in mind, we will move into the construction of the trading strategy. If you don't understand, it's okay. When you finish this video lesson, go back and look at the principles again, and maybe you want to print out the charts, print out this chart, print out this principle, and learn to look at your favorite stock. If your favorite stock is Apple, then look at Apple stock chart with these principles in mind. Alright, let's go into the trade criteria. There are a few trade criteria which it needs to satisfy before we have a valid trade. Number one, there should be a bullish cross. Bullish cross in the context of this trading strategy is where the 20 MA goes back above the 50 MA. This is where the bullish 20 MA cross above the 50 MA. We must always have a bullish cross. This is how you spot stocks that we want to trade in. Number two, there must be a sideways consolidation for at least 10 days. Just look at here, the stock trades sideways for many days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. 20 days of sideways consolidation before it went higher. Now, the sideways consolidation must not be too wide. It must be quite tight. If the sideways trading is from here and then it jumps up here, down, up like this, it's not valid. You want it to be in a relatively tight area, because this shows that the stock is resting, and eventually after a period of rest the stock will break out and move higher. And what you do is you draw a box over the consolidation. We have this consolidation here, and with your charting platform, use the rectangle and draw a box over it. And this will be your reference point so that it will be easier for you to spot what you need to do. Okay, and after you have drawn the box, buy the stock when it trades above the consolidation. So this is the consolidation of sideways trading. You have drawn your box, and the moment the stock trades above the box, you buy it. This is your entry point. And put a stop loss below the consolidation. Put a stop loss below the box, somewhere around here. Okay, so you're buying here and you're putting a stop loss here. And an extra tip here is, if the stock breaks above a downtrend line, it signals a change from downtrend to uptrend. Okay, try to find a situation where you have a bullish cross, a consolidation, and also a break of a downtrend line. Since this is not a training video about how to draw downtrend lines, we won't go into detail, but how you draw downtrend line is you connect as many highs as possible. And here I've connected the highs and draw the downtrend line, where I use this blue line here, okay, blue color line. The stock at this moment traded above the downtrend line, and it tells us that the stock is ready to change from a downtrend to an uptrend. So ideally, you want to see there is a break of a downtrend line so that it supports your case of a bullish move up. So when the consolidation happens and breaks above this downtrend line and there's a bullish cross, you buy here and you put a stop loss. And if you have taken this trade, my friends, you would have seen quite a nice, rapid, nice move up here. Okay, and look at the movement up compared to your stop loss. This might at least given you a 2 to 1 reward to risk ratio. I think maybe 3 times reward than the risk itself. So that is the beauty of this trading strategy. As I say, you need a trading strategy that gives you a high reward to risk ratio, so that in the event if you win half the time and you lose half the time, because of your high reward to risk ratio, you can win half of the time and you can still make money. But if you follow the tips and knowledge that I give you in this video, you will probably have around 70 to 80% win rate, and with a reward to risk ratio of at least 2 to 3, and you will come ahead in no time. Now let's take a look at another example. I've conveniently put the trade criteria here so that even if you want to print out and screenshot the charts here and print out, you always have a reminder here of what are the trade criteria. So remember, the first criteria, is it met here? Yes, we have a bullish cross. This is the stock chart of Ali Financial. It is a daily chart. Remember, we are dealing with the daily chart, and there is a sideways consolidation. How many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And we can draw a box over the consolidation. Okay, and we buy the stock the moment it trades above the consolidation, and then we put a stop loss below this consolidation. And look at how nice the stock went up. It just shot up higher and higher until it goes to this about 35 area. And guess what? We can also draw a downtrend line connecting as many highs as possible. Remember what I told you about downtrend line. When a stock breaks above a downtrend line, it signals that the stock is willing to change from a downtrend to an uptrend. So when you have all this technical convergence, it gives you a strong case for a bullish trade, a high probability trade, in other words. So I'm going to teach you a way for you to capture the profits. What good is it if you only know how to enter, but you don't know how to exit the stock? And here is the beauty of this trading strategy. We don't need to add anything else except the red line here, which is the 20 MA. We're going to use it as a way to take profits. Now, with this trading strategy, if a stock is bullish, is good, if chosen the correct stocks correctly, very rarely will it drop below the 20 MA. And look, the moment you buy it, it goes all the way up. It is only at this moment it drops below the 20 MA. And here's the tip here. Use the 20 MA as a trend following tool and take profit. So when the stock drops below the 20 MA, you can take profits. Okay, you can maybe sell half of your position or 2/3 and see what happens. But it's a very simple trend following tool, but it works very, very well. And at this moment, I just want to ask you if you have learned something new, if this lesson so far gets you excited about making money in the stock market, please take 2 seconds, just 2 seconds to click the subscribe button and click on the notification bell. Now let's take a look at another example. Here are the trade criteria and the things you need to look at. And here we have the stock chart of Dollar Tree, and actually this stock formed a cup with handle pattern. This is the cup with handle pattern. Okay, and the handle itself is actually the consolidation part of our trading strategy. We have a bullish cross here, and we can draw a box over here. There was a gap up here and topping tail, but we can just ignore it. You see, when it comes to trading, we do not need to be stuck always with something. You need to be flexible. So this move up here, we can just ignore here, and we can actually draw a box here. The moment it trades up, we buy and put a stop loss here, and look how nice it run. So another tip here I would like to give you is see if there are any bullish reversal chart pattern that appear. If you have a bullish reversal chart pattern and a bullish cross, odds are it will strengthen the case and your stock is more likely to move up. So the stock went all the way up from a topping tail. Well, there's resistance over here. You might want to take profits earlier, and this is where your support and resistance analysis comes into play. And if you study a bit more about support and resistance, you'll be able to know when to take profits a bit faster. But if you do not know how, you can still use the 20 MA. The moment the stock drops below here, it is time for you to sell the stock. Alright, another trade example. I give you a lot of trade examples so that you know that this is a trading strategy that works. And with this trading strategy, you can actually get about 3 to 5 good trades in a month. And that is all you need to start making money in the stock market. So we have this stock here. Remember I said combine it with bullish reversal chart pattern. Stock has been declining, but it formed a rounded bottom chart pattern, and there is where the consolidation happened. The bullish cross, you draw a box, you buy it, and you put a stop loss here, and look, the stock just shoot up like this, and it kind of become very parabolic actually. And look at the extreme optimism and extreme volume here, and this is where I will give you another stock tip. When a stock moves up too much too soon at an unusual volume, you should consider taking profits off the table, maybe half here, and maybe you sell the remaining half as it drops below the 20 MA. Now let's take a look at another example. The direction daily regional bank bulls 3 times shares. So this ETF declined and it formed a reverse head and shoulder, broke a downtrend line, and then it had a bullish cross and this consolidation where traders can buy, put stop loss here, and it went higher. And if you're not sure how to take profit, you can always sell the moment it drops below the 20 MA. So the tip here is to always check and see if there are bullish reversal chart patterns to support your case. Another example, one more example before we end our lesson. Here are the trade criteria, and this stock, Lennar Corporation, remember this is the daily chart, had a nasty decline, but it soon broke above the downtrend line and had a rapid rise. And actually, as the stock formed a bullish cross and a consolidation, the stock actually was forming a bullish flag. This is a bullish continuation pattern, and we can actually use the target from the bullish flag and project it upwards. This is from the flagpole here, we can project it higher to get a possible target. And the consolidation here, the box, we buy the breakout, put the stop loss, and well, you can sell the stock as it nears a possible target. And if you don't know, you can just sell half of the stock as it drops below the 20 MA here. So tip number 1 is, if a stock forms a bullish flag, then it strengthens our position. We can use the flag as a target. And tip number 2 is, you can take partial profits when stocks fall below 20 MA. And here's a bonus, is you can raise your stop loss to break even. What is the break even? As your target is met, you want to raise your stop loss to your buy point so that you can have a free trade. So if in the event the stock just doesn't go up anymore, it drops to your purchase price, you got nothing to lose. So in summary, my dear friends, you have learned a trading strategy that is reliable and is time tested, and it has a good reward to risk ratio. So if you don't believe me, go and check this strategy out. Put on the daily chart and the 20 MA and the 50 MA and look at the criteria and look at many stocks in the S&P 500 and the US stock market, and you will realize that it happens many times in many different stocks in the US market. My friends, you have also learned trade management, which is very important, and which a lot of people, a lot of new traders don't do trade management very well. But in this lesson, I've given you how a template on how to do proper trade management. And my friends, you have also learned to combine different technical concepts. These technical concepts are like breakdown trend line, bullish reversal chart patterns, where you combine it with the bullish setup, and this strengthens your bullish case. Please go and observe many stocks with it set up, and once you're comfortable, start paper trading it. And once you are profitable on 7 paper trades, do try it with real money. And of course, if this lesson is helpful, please like this video and subscribe to my channel, so that when I give you another trading strategy video lesson, you'll be notified. Oh, do click the notification bell as well, so that when I do a video like this again, you will know when it comes out. So thank you very much for your time and watching to the end, and I'll see you in the next one.